Welcome to another weekly general update for the 3rd of September, and we've just completed yet another quite extraordinary week in the markets, and probably capped off last night with another big surge in gold and silver and the US market turning down. So as I've written fairly extensively in the daily alerts this weekend, it really requires us just to make a few amendments to the way that we're approaching markets and the trading at the moment, and I'll use these videos to put some visual substance to what I wrote. So just as a reminder, this is general advice only. Everything that I'm doing here is merely about providing you with information upon which you can make your own decisions for trading. We've got a model portfolio running, and there are recommendations, but at the end of the day you need to make sure that they're appropriate for you. So the action for the week, the S&P closed up very slightly, but essentially flat for the week. But as it has been, it was pretty much all over the place. We had a very strong run in the first part of the week, and then finished with a couple of down days. The ASX outperformed the American market yet again. It closed 1.2% higher on the week, so the ASX is definitely continuing to do a little bit better. Gold was a bit all over the place, but ended up closing very strongly, up $56 on the week, or 3% higher, and virtually all of that was in the last trading session. It's broken some key resistance levels, so we've really got to take a relook at gold now as to where it's heading in the short term. Silver closed about 5% higher for the week, and is certainly showing some signs of starting to perhaps trend again. So silver going from maybe lagging gold a bit to now starting to outperform it again. Now, I don't have any charts in the daily alerts. I've talked about the possibility of trading a silver ETF, and in Australia that code is ETPMAG, as I've mentioned before. There aren't charts in Market Analyst for that particular entity, so I've taken these from elsewhere. So just to give you a bit of an idea of the trend that's going on here, this is the 12-month chart of ETPMAG, which is the silver ETF, and it shows that this time last year we were trading at $20, so it's almost precisely the price of silver, and it is lagging a little bit now. It's just showing it closed on Friday at $38.50. So that's the 12-month chart. Just zeroing in a little bit on the 3-month chart. That's what it looks like. So you can see it's had a bit of a sprint in the last 2 months from around $32 to $38.50. The reason that it's slightly less than the silver price is because there are administration costs in running that fund. So let's get over and have a look at some of the charts, and we'll start with the S&P 500, and you can see we had a fairly negative reversal on Thursday. On Wednesday, the price had gone to a high of 1230, which was almost exactly to the dollar, to the point I should say, where I had the retracement level set. So a turn down from there, from the 50% level, is not unusual. My view was, and you'll notice that I've got a bit of a path drawn out here. My view was that the markets were looking as though they had an upside bias to them, and so what I was expecting was a pullback from this 1230 level back to perhaps 1190, then a move higher up to this 1260 area, which would complete that upward leg. So this in effect here from from the 9th of August to wherever that finished would have been the B leg, and then with the C correction still to come, which would play out in this fashion. Now, the fact that the markets have pulled back, they've gone on Friday night straight through the this first retracement level at 1189. They went relatively straight through the second retracement level at 1176. Now brings into play a different set of possibilities, and that is that we've now, the B leg is now complete, and we're now into the C leg, and the C leg will go down and probably either retest the 1100 mark, or may in fact go lower and go down into this 1080 zone, or possibly even down to this 1020 area as well. At this point in time, I have moved from having an upside bias in the short term to I've had to move back to neutral, or effectively not sure, because really it's going to depend a lot on what gets said by politicians in the next few weeks. We've got Obama speaking on Monday night, I believe, and that could possibly be stimulating for the markets if he has something new to say. We have all manner of decisions that could be made in Europe about their situation, and we've got some more Bernanke and company decisions to be made over the next 2 to 3 weeks. So we really are still at the mercy of pronouncements by politicians. So it's really hard to be confident in the middle ranges. We can really only get confident at the extremes, as I've been saying for some time. So it's quite possible now that the B leg is complete and we're now into the C leg. It's really hard to call on a short-term basis. Longer term, big picture, I'm of the view that we've still got some more downside to come yet. So that's the S&P. Let's have a look at gold. So this is gold on a daily chart, and you can see we had a very significant correction which occurred on the 23rd and 24th and intraday on the 25th of August. Took us down to this 50% level, or almost to it, at 1694. The market bounced from there. I thought it would top out at 1830. It did for a day and then started to retrace, but then it just blew everything away on Friday night. I was expecting a bit of a rally, maybe up to this area here around about the 1860 mark to complete the B leg and then see a C leg down. That possibility now has been significantly reduced by the action on Friday night. So it's possible that these 3 days down is the completion of the correction in gold. That would be unusual to go straight down and straight back up again, but it's entirely possible. And as I wrote in the alerts, normal market action is getting overridden by some incredibly powerful forces at the moment. So we've got to remain open to the possibility of some non-normal things happening, and that's now a distinct possibility in gold. So as a consequence of that, I've suggested that we, if you did happen to take the short position in gold at 1855 on Friday night, that you close that rather than waiting for the exit. And obviously the strategy is to start to look at building into a long position in gold and silver. Okay, let's have a look at the Australian indices, and we'll start with this is the ASX 200, or the XJO. This is it on a monthly chart. You can see we had a big dip in August. We had a pretty negative finish on Friday, and that's going to certainly follow through on Monday, I would expect. So I'm expecting that we're probably going to see a bit more downside here on a monthly basis. This is the daily chart. You can see we've been in this downtrending channel since about April. and the index had moved back towards the 50-day moving average and the top of that channel over recent days, but we saw a reversal on Thursday initially, and then again on Friday. So the bottom of that trading channel now is just a tick under 4,000, so that could be a possible target point for our market. The futures are indicating somewhere down here around about the 41.50 area at this point in time on Monday morning. So I think we're going to move into the lower half of this trading channel on Monday morning. I won't go through the particular sector indices because they're all showing exactly the same thing. The Small Ordinaries Index, which has been looking pretty good, also turned down along with everything else on Friday, so I'd expect to see that follow through on Monday as well. Now let's have a look at our portfolio of current positions. No, I won't do that. I'll do that in the major chart update for members. So from here, I think the key thing is that we continue to have relatively low exposure to the market, given the uncertainties, the fact that the markets could dive either way. Obviously gold and silver was waiting for the correction to play out, but that may well be over, so we're really looking at a strategy of starting to build and increase our exposure in that area. So the markets remain in a very anxious kind of mentality, and I think we're going to continue to see a fair amount of volatility. The focus is just to keep our powder dry until we can trade at the extremes, which I think are going to be extremely productive for us. So that's it for the general update. I'll cover the specific trade recommendations in the chart update. Cheers.